Hello, welcome back to the channel. In today's video, we are breaking down the top 3 stocks on the Ghana Stock Exchange to consider buying before August 2025. Whether you are already an investor or just starting out in the Ghana market, this video will give you deep insight into why these companies stand out in a challenging but opportunity-rich economy. And disclaimer, this video is not a financial advice. Do your research or speak to a financial advisor. We're simply sharing analysis and trends based on my personal data. In this video, we will cover the company's background, financial performance, growth potential, risks, and why now is the time to buy. So grab your notebook and make sure you give this video a thumbs up. Subscribe to this channel if you haven't already, and leave your comments or suggestions or your thoughts in the comment section. I'll reply to them all. Now, before we dive into the individual stocks, let's take a minute to understand the bigger picture of the Ghana Stock Exchange in 2025. First, let's talk about performance trends over the last year. The Ghana Stock Exchange Composite Index saw a mixed bag between the late 2024 and mid-2025. After a difficult 2023 marked by the government debt restructuring and rising interest rates, the market began to show signs of low but steady recovery. In the year 2024, we saw a cautious rebound, driven by financial stocks gaining investor trust and the performance of big players like MTN Ghana. However, the recovery has not been uniform. Mid-sized companies are still struggling to attract capital. Overall, returns have been modest, with composite index growing within a single-digit range this year so far. Secondly, the impact of inflation and the ceiling cannot be ignored. Ghana's inflation, though cooling compared to the highs of 2022 and 2023, remains sticky around 13% in June 2025 as at now I'm recording this video. This persistent inflation continues to affect consumer spending, corporate earnings, and investor confidence. The cedi, while more stable thanks to the Bank of Ghana intervention, still faces depreciation pressures, especially against the US dollar. I will leave a link in the description below to a video on in-depth insight on how the cedi was able to beat the US dollar in 2025. This weak currency environment affects companies who are heavily dependent on imports, impacting profitabilities across multiple sectors of the exchange. Thirdly, let's zoom in on sector performance. Banking stocks are recovering despite the challenges of the domestic debt exchange program in 2023. Stronger banks like Cowbank are showing recovery through SME lending and digital transformation. Agricultural stocks remain weak. Poor infrastructure, limited capital access, climate impact continues to weigh on agribusinesses on the Ghana Stock Exchange. Fast-moving consumer goods stocks, on the other hand, such as farm rate, are adapting fast. Though margins are squeezed by inflation, demand for trusted brands remains resilient, positioning fast-moving consumer goods as a defensive sector in these uncertain times. Finally, let's talk about investor behavior, both local and international. Foreign investor participation remains relatively low compared to pre-2020 levels. Concerns about currency risks and repatriation of funds still make Ghana less attractive than some neighboring markets. Repatriation of funds here refers to the transfer of funds from Ghana bank account to foreign accounts by converting them into foreign currency. However, local investors are becoming more active, especially young investors who see the Ghana Stock Exchange as an opportunity amidst economic uncertainty. Mobile investment platforms and financial literacy are helping to drive this local participation. Pension funds are slowly rebalancing towards equities, giving some sectors a needed boost. And that's a quick snapshot of where Ghana's stock market stands as we move towards August 2025. With this content, let's now break down the top 3 stocks every smart investor should have their eyes on. Before revealing these top 3 stocks, it is important to understand why these particular companies were chosen. One is strong balance sheet. The first thing I looked at was financial stability. A strong balance sheet means the company can weather tough times. It is not drowning in debt and it has a solid asset to back its operations. Especially at Ghana's current climate, with inflation and currency pressures too high, companies with poor financial health are at serious risk. The companies I am about to share have been proven to have managed their resources very well and are not at any risk of sudden collapse from interest rates or unexpected shocks. And the second reason why these companies were chosen is their proven resilience in tough markets. Ghana's economy has been through a lot these past few years, from COVID impact to debt restructuring and unstable exchange rates. These stocks have shown resilience. They did not fold under pressure. They adjusted, they innovated, and they found ways to protect their bottom line even when the wider economy was struggling. That's the key of a quality business, not just surviving but adapting through hard times. And the third reason is their strong dividend history. Why does this matter? In a volatile market, dividends provide cushion. They offer investors regular and reliable cash flow. Sometimes that's even more valuable when inflation is eating into savings. The companies I'm highlighting here have consistently paid dividends, even during hard times. This shows they prioritize shareholder value and operate from a position of financial strength. Dividend-paying stocks are often more stable and less speculative. And fourth reason why these stocks were chosen is their room for growth, locally and regionally. Another key factor is growth potential. It is not enough for a company to be stable today. We want companies that are positioned to capture future opportunities. These companies aren't standing still. They are expanding services, reaching customers, embracing technologies, and in some cases, looking beyond Ghana's borders into the West African markets. That potential for future growth adds long-term value to your investment. So in summary, strong balance sheet, proven resilience, reliable dividends, and room for growth. These are the pillars I used to select the top 3 stocks we are about to analyze. They aren't just stocks to speculate on, they are companies owned for stability, income, and growth in 2025 and beyond. Let's now talk about the first, and without a question, the most dominant stock on the Ghana Stock Exchange right now, MTN Ghana. Now, MTN Ghana is far more than just a telecom company. It has quietly become a financial powerhouse, especially through its mobile money service known as Momo, which today is one of the most critical drivers of financial inclusion across the country. Why MTN Ghana? First of all, MTN Ghana controls the largest market share in telecommunication. Over 65% of Ghana's mobile users are on MTN network. That scale gives MTN an incredible advantage from infrastructure to pricing power. But beyond cost and data, it is their mobile money platform that set them apart. Momo is not just a payment tool, it is an ecosystem. People use it to send money, save, invest, pay bills, and now to access small loans. In a country where traditional banking still lifts up millions, MTN has built the future of finance in the palm of people's hands. Additionally, MTN has a strong track record of the consistent dividend payouts. For long-term investors looking for stability, this is crucial. The company prioritizes rewarding shareholders through reliable returns, even in tough economic times. Lastly, there is the unstoppable growth of data usage. Ghanaians are consuming more internet than ever, from social media to streaming. And MTN's infrastructure allows them to capitalize this demand better than anyone else in the market. If we look at the numbers, MTN Ghana's earnings per share from 2021 to 2025 shows a steady upward trend. Despite the broader economic challenges, revenues have grown year on year, driven by increase in both data and fintech services. Dividend history is reliable. MTN pays dividends twice a year and has maintained this for over 5 years, making it a favorite among income-focused investors. Revenue growth is solid, fueled by Momo, data, and their ever-expanding subscriber base. The future is even brighter. MTN Ghana is currently positioning itself for the 5G rollout, which will unlock entirely new business opportunities in streaming, gaming, and enterprise services. They are also expanding their fintech ecosystem beyond just Ghana, with ambition to serve as a pan-African digital financial hub through partnership across the region. And of course, there is no investment without risks. For MTN Ghana, the biggest challenges come from regulatory pressures. Both the Bank of Ghana and the National Communications Authority have tightened oversight on mobile money and telecoms. This could impact growth if new restrictions are introduced. And let's not forget currency volatility. As the city weakens, MTN's operational costs, especially those linked to international vendors, could rise, affecting margins. But when you look at the bigger picture, MTN Ghana remains the strongest and the most future-proof stock on the Ghana Stock Exchange. If you are seeking consistent growth, strong dividends, and exposure to fintech innovation, MTN Ghana continues to be the king of the Ghana Stock Exchange. Let's now shift from telecom to banking, especially car bank. Car bank is often overlooked by casual investors on the Ghana Stock Exchange, but for those paying attention, it represents a very strategic opportunity heading into 2025. Car bank stands out today as one of Ghana's rising banks, especially during a time when the entire banking system has been undergoing significant restructuring. After the shocks of Ghana's debt exchange and the banking sector cleanup over the past few years, Car bank has emerged leaner, stronger, and far more focused on its future. Why car bank? One of the key reasons why car bank is attractive right now is its aggressive modernization through digital solutions. The bank has recognized that the future of financial services in Ghana is digital first. From mobile app to SME-focused online services, car bank is positioning itself to capture the next wave of digitally savvy customers. Secondly, they've doubled down on SME lending. This is crucial because Ghana's economic recovery is driven by small and medium-sized businesses from agriculture to retail services. Bank is strategically growing its footprint in this sector, offering tailored financial options that bigger banks often overlook. And importantly, Bank currently trades at a lower price-to-book ratio. In simple terms, this means that the bank is undervalued relative to the actual worth of its assets. For investors looking for value, Bank offers an entry point with room for strong future gains. Financially, Bank has made a significant matches. It has recovered well from the heavy debt position it had to endure during Ghana's financial restructuring period. The balance sheet is cleaner now, bad debts are addressed, and capital adequacy ratios are improving. Profit margins are growing again thanks to better risk management, lower loan default, and increased revenue from digital services. The bank's projections for 2025 are positive, with analysts expecting continued profitability as Ghana's economy stabilizes. Looking ahead, the growth potential is significant. Ghana's SME sector is expanding. The car bank is well positioned to benefit as businesses seek accessible and flexible banking services. And their focus on digital banking adoption gives them an edge. From mobile apps to integrated payment solutions for businesses, car bank is becoming more competitive in the modern banking space. And as Ghana economy is slowly improving, there is a broader confidence returning to the market that will lift financial institutions like car bank. And of course, there are risks. Ghana's interest rate climate remains unstable, and policy shifts can impact lending activities and loan performance. In summary, if you believe in Ghana's recovery story and SME businesses as a backbone for that recovery, the Camp Bank offers significant long-term value. It is not about where the bank is today, it's about where the bank is heading over the next 5 to 10 years. For patient investors, Camp Bank represents an undervalued stock with plenty upside potential. Our third and final pick brings us into the world of consumer goods, specifically Farm Milk Ghana. Farm Milk is a household name across Ghana, but what many investors fail to realize is how much this company is evolving. It's not just about ice cream and yogurt on the streets. Farm Milk is quietly transforming itself from traditional dairy producer into a diversified, modern, fast-moving consumer goods powerhouse. There are three reasons why Farm Milk remains a top pick for investors in 2025. Firstly, they are expanding beyond dairies. Farm Milk is moving into beverages and health products. This expansion is positioning them to serve not just children and roadside buyers, but health consumers looking for quality and nutrition. Secondly, they are backed by a Danone Group, the world's leading food companies. This backing gives Farm Milk access to expertise, technology, and capital that local competitors simply don't have. It also speaks volumes about the parent company's long-term confidence in the Ghanaian market. And thirdly, Farm Milk enjoys tremendous brand trust. In Ghana and across West Africa, a food brand carries the same level of loyalty. That brand strength keeps competitors at bay and ensures farming products remain at front of minds of consumers. The growth potential here is clear. As Ghana's middle class continues to rise, the demand for reliable and quality fast-moving consumer goods products will only grow, and Farm Milk is perfectly positioned to capture this demand. And additionally, their brand equity across West Africa opens doors not just in Ghana but in every market, making them a regional player, not just a local one. And of course, there are risks. Like many fast-moving consumer goods businesses, farm milk is exposed to input cost inflation things like the dairy, sugar, and packaging materials are all seeing price volatility. And there's also the issue of currency fluctuations. As the cedi weakens, imported material become more expensive, which could affect margins if not carefully managed. By looking at the larger picture, farm milk represents a perfect blend of legacy strength and a future-focused innovation. They have the product, the brand loyalty, and a backing to succeed. For investors thinking long-term, not just 2025 but the next decade, farm milk offers a steady and defensive growth potential. The truth is, the Ghana Stock Exchange still holds hidden gems. You don't need to look abroad for solid investment opportunities. Ghana's future is quietly being built by companies like these, companies that combine resilience, innovation, and deep understanding for the local market. But success on the stock market, especially in Ghana, requires three things: patience, research, and timing. The investors who stay informed, think long term, and act strategically are the ones who will build true wealth in the years ahead. And if you found this video helpful, kindly give this video a thumbs up, subscribe to this channel if you haven't already. Your support helps this channel to grow and help many more people to see this video. Leave your comment or your questions in the comment section. I'll reply to them all. Thank you for watching. I'll see you in my next one.